Welcome to our weekly market review brought to you by ETM Analytics and Treasury One. I'm joined by currency strategist at Treasury One, Andre Celia. Andre, let's jump straight into the big domestic focus this week. Will be on Wednesday when Stats SA will release July's inflation figures. We are expecting the data to have moderated, price pressures really continuing with the disinflationary trend, which is all just to say it's going to bolster the argument for the SARB to start cutting rates likely in September, which for now will put us in synchronization almost with what's happening in the US.
Yes, good morning. An interesting one. So let's just look at the weekend. Positive news. We win the rugby against Australia a second time. We beat the West Indies at cricket on a 5-day test. On Sunday morning, Drickus du Plessis successfully defends his title. So come on, things are just lightening up here. So guess where's inflation going? It's going to go lower. And if it doesn't go lower, it's at least going to be out at the same levels than it's been before. But my prediction would be that we could even see a slight positiveness there. And it would underline the possibility with the South African Reserve Bank in September to lower interest rates and give some good news to consumers in South Africa, where they will then save a little bit, especially the ones with lots of debt. Companies will show relief in terms of their cost of debt. And further good news could then follow in terms of, better results, markets doing better, retail sales coming back a little bit, and generally people just being able to afford that big debt that they have a little bit better. And then add to that another petrol price decrease that we could expect in the beginning of September. So some good news out there for the consumers, for the country as such. It seems that things are actually turning out and looking better.
And just mentioning the rate cuts, what's very interesting to note around it is the futures markets. If you look at the US one, they've got 8 rate cuts of 25 basis points priced in for the next year, whereas domestic markets only, I think they barely had 5 rate cuts priced in for the same period, which, these figures will change, but it just shows that markets are really expecting and anticipating the SARB to remain more conservative than its US counterpart. And speaking of which, it's also the next focus point for this week will be Fed Chair Jerome Powell's speech. I think it's on Friday at Jackson Hole. Investors are going to take a tweezer to his speech, and they're going to dissect every word and nuance. Perhaps not in so much anymore on when rate cuts are going to start, but they're starting to look now, okay, what's going to follow? What do we expect? Where is this going?
Yes, the man of the moment, Jerome Powell, this week, Jackson Hole. Everybody's waiting with a bated breath as to what happens there. What does he say to us? And as you say, how do we dissect that and translate that into numbers as to how many cuts this year and beginning of next year, and how big these cuts will be for a start? I don't think there's too much debate about this September start anymore. I think that's almost a foregone conclusion by the markets that it will happen in September. Now, if I read the figures and I look at unemployment and I look at jobless claims and I look at housing starts and the decrease of housing as a percentage of GDP, housing starts as a percentage of GDP and so forth, all these things still look, and people are still writing into some of the economic reports the possibility towards the end of the year, beginning of next year, that there could be a recession, depriving the world of economic growth that they so desperately need if that falls flat in America. So the debate, I don't think, is anymore about when. It is September. That's what everybody expects. The debate will now be on how big is that first cut, how soon after that, and that's where the dissecting of his speech will come in, clearly. What can we pull from that? Is it 50 basis points? Is it 25? Is it at consecutive meetings after the September meeting, or are we skipping some in between? That's going to be the debate, and that's what markets will react to. That's what currencies will react to after dissecting. So we have to wait for Friday to hear the man of the moment, Jackson Hole's speech when he's speaking there.
Andre, you mentioned, it's good to be South African on this Monday morning, but you forgot to mention that we have electricity. The sun is finally shining in Cape Town, so there's a lot of positive sentiment, and it includes the rand, which just seems to be having a party all by itself.
Yes, no, that's having a party all by itself. It's the best run in 13 years. So that's something that I think has actually caught a lot of people off guard. I don't think it's actually caught us. If we sort of go back on our videos over the last couple of weeks, then we're not caught off guard. We may be caught off guard a little bit in terms of how easily it broke through the 18, but we said that the 1850 is a very good trading range, and once it breaks the 18, it could move faster quite a bit, because of that was a very big technical point. So that's exactly what happened. The dollar still seems to be a little bit on the run. But what we should caution about now is that if you look at the overstretchness of these levels where we are trading, 13 years, the best levels, I think it's the 9th or 10th day that we're only moving in one direction. So is the dollar. The dollar VIX index is a bit overstretched. So everything looks, that like that elastic band that you're pulling and pulling and pulling and pulling, how far before it actually breaks and make a bit of a upward move just to have that. And you actually need that to keep the path going of strengthening. And if you don't, then that stretch of that elastic band just makes that jump higher, bigger and more aggressive. So we do need some change here. And so we should be cautious of that. Short-term importers, import payments should really look at these levels at doing something. Make sure that you have a little bit of cover, that you have on hand to pay for your imports, your shipping cost or whatever, because these are very lucrative levels that we've not seen for a heck of a long time. So that's our advice at this point in time. Make sure that you utilize the positiveness of the rand your favor.
Well, let's hope the positive news keeps on coming for South Africa this week. Andre, thank you very much. We will catch up again next week.
Thank you.